Okay, if you want to buy a house this year and you're self-employed, I have a tip for you. If you're new here, hi, I'm Theone the Lender, and I help you get into a house and figure out what the heck a mortgage is. I've also been doing it 7 years, so I know a thing or two. Okay, so when you are self-employed, here's what we need as far as documentation for you to purchase a home. Obviously, your credit score can't be awful. If it's anywhere like 620 and above, we can work with it. 640 and above, great. 740 and above, perfect. Next, we would need your last 2 years of business tax returns. So you have to have filed business tax returns for 2 years or been in business for 2 years before we can even give you a mortgage. That's just how it works, 2 years. Now, what we do is we use those business tax returns to calculate your monthly income. Here's where the problem lies. We, as mortgage bankers, have to take whatever income you've made after all of your write-offs. And then whatever the average is for the 2 years of tax returns is your monthly income. So I come across a lot of people who tell me, Theone, I make a ton of money as a business owner. What do you mean I can't get approved to purchase a home? Well, Linda, you wrote everything off and we can't use it. So it's really important that you work with a really awesome accountant, and 2 years you have to commit, like you have to declare that income, which I know sucks. Because as a business owner, I understand you get the perks of being able to write things off. Now, I'm not saying you don't have any write-offs and you have to declare all of your income, but don't write everything off and declare like $2,000 a year. We can't work with $2,000 a year. You wouldn't be able to get approved for a mortgage if you only made $2,000 a year. Now, there are other programs, and I will get into those. There is something called a bank statement loan, and in short, it just takes your last 12 months of bank statements as a business, and it gives you your monthly average based off of the deposits that you put into that bank statement. These do require a little bit more of a down payment based off of your credit score. So you are going to need, I want to say, like 10 to 20% down. But if you want to get approved normally with just like a regular conventional or FHA loan, then we do have to use the last 2 years of your tax returns to calculate your income. For more on this, or if you have questions, make sure to follow me, link in my bio to get started, and let's get you in a home this year.